Hello and welcome to Switzer Super TV. I'm Peter Switzer. This is my colleague Paul Rickard. Hi Paul.
Hi Peter.
So we've got unusual things in the market, high-tech stocks being sold off, and Coca-Cola's been sold off. Tell us why the market's down generally and why Coca-Cola's copped it.
Well, the markets are down generally, Peter, because we're following the lead from the US, where a number of the high-tech companies have done really well, really high sort of valuations. We've seen a couple of companies here, companies like Xero, which were trading on almost a model of 100 times current year revenue.
Crazy.
A few other things that are worst cases in the US, and there's a bit of profit taking, and of course, whenever that happens, things come under pressure.
Okay, so the market's down, but why did Coca-Cola cop? It's been a great company in the past.
Well, it has in the past. It's had the new CEO has been in place about 6 months. She announced a profit downgrade, and the analysts have used that as a reason to lower their forecasts. And it's got some challenges both in the sort of the supermarket wars with Woolworths and Coles, but also even the business in Indonesia is struggling a little bit. So
yeah, and Pepsi's also given a bit of a run for their money as well.
They are indeed, and I think we've seen the impact of that, so we've seen some pressure there on this price.
Well, here's a question a lot of people say, well, it's been a good dividend payer. Is it good value at these levels, do you think?
Look, the reaction I don't think we should be too surprised. When people come out with these forecasts, the market is pretty punishing.
Yeah.
It got down to around about $9. Look, I think there's some value there, but it's unlikely the market is going to come around to Coke quickly. Typically when you fail to meet expectations like this, the market takes a long time to put you back in the sort of give you the halo rating again. So I don't see any immediate recovery in their share price, but I think for the long-term value investor, I think that around $9 they're going to produce some pretty good dividend returns.
And I presume the dividend, as you can say, you made the point, the dividends will be okay at least.
Well, you expect it to be cut this year, but I think we'll probably be looking at least somewhere between 4 to 5%. Would be my expectation for the dividend this year.
Well, as they say, Paul, things go better with Coke. That's the Switzer Super TV for this week. Thanks for joining us.